Hi, Ketki. It is good to see you again. So the equity markets were pretty wild last week. The TSX was actually down by 2.6%. What would you say happened in the markets last week?
Yeah, Simon. So last week was pretty wild in equity markets. The sell-off actually kicked off the week previous when the Federal Reserve hiked rates 50 basis points. The move was largely expected to curtail soaring inflation, but it really forced markets to confront the reality of slowing economic growth. Markets were also weighed down by economic data from China, which has been in lockdown since March now, including in Shanghai, which is a massive consumer and industrial hub. The lockdowns naturally led to a contraction in Chinese output. Retail sales were down 11.1% from a year earlier, and factory production declined 2.9% from a year ago. Of course, China is the second largest economy, and a slowdown there will have dire repercussions globally. So that's what we really saw markets reacting to, just a risk on sentiment, which particularly affected more risky assets such as equities. And of course, we saw a complete meltdown in crypto.
Oh yeah, it was pretty crazy in crypto also. I forgot about that. And so the TSX now today is up 141%. So it's up now. What do you think is creating the rebound?
Right. So the TSX is up 1.41% today in the day's trading. And today is the first day in a couple of weeks that we've really seen some optimism return to equity markets. And that's because of two key pieces of news so far. The first piece of news is that China plans to begin lifting restrictions, which is going to see the economy increasing output again. And the second piece of news is that US retail sales came in fairly strong at 0.9%, which indicates resilient consumer spending and sentiment despite inflation and worries of economic slowdown. So that saw some risk sentiment return to markets today and eased concerns of really a recession somewhat. The Canadian index, which is heavily weighted towards commodity, was supported by energy and materials, which are being driven again by the China reopening. Industrial metals, in particular, are likely to see a fairly big rebound in demand as China begins increasing, or rather normalizing, its industrial activity. And energy provides a slightly more mixed picture. So the Canadian Energy Index is still being supported by Chinese demand. China is the largest importer of crude globally. So demand is expected to normalize now that the lockdowns are ending. The Canadian Energy Index is also being supported by the likelihood of a total EU ban on Russia, which will further constrain supply. Currently, the ban is being held back by Hungary's veto, but it is expected to likely go ahead on a summit that begins on the 30th of May. The reason the picture is a little bit more complicated is because the price of crude started out the day very strong because of these factors, but it retraced gains later in the day after Venezuela announced that it will increase production and attempt to make up that shortfall from Russia. So while crude is lower, Canadian energy still remains in the green today because Canadian producers are also expected to be able to make up the shortfall from Russia along with Venezuela. So that's really what's helping the TSX today. A general return of risk on sentiment, as well as a rebound in commodities.
Well, it feels good, that's for sure. And do you believe that the rebound would be sustained? And what could be the deciding factor if it is?
Right. So analysts, who are people far more familiar with all the factors involved in this than me, are remain mixed about the longevity of the rebound because the macroeconomic picture still looks worrying overall. Um, Bond yields are still rising, and that's really because the deciding factor will be how aggressively and quickly central banks raise rates to tackle inflation. We've already seen aggressive policy moves from the Fed, the Bank of Canada, the Bank of England, Reserve Bank of Australia, Brazil, to name just a few key players. Inflation is really soaring globally. So it's something that most key central banks need to tackle, which again stokes concern of an economic slowdown. Again, today, the Fed said that it will stick to aggressive monetary policy tightening as needed to counter inflation. So The rebound and how long, what happens to equities going forward will depend largely on how quickly central banks raise rates. But one thing's for sure is that there's going to be less money, less free money, less liquidity in the market. So it won't quite be like 2021. It won't be, a bull run across the board for equities. It's certainly going to be a more cautious year.
Okay, that's good to know. So you were talking about all the central banks around the world. So what do you think would be, like, for Canada, the likely path for the Bank of Canada? What do you think the indicators that tell us, and what are the consequences for the Canadian economy?
Right. So the Bank of Canada definitely needs to move quickly to tackle inflation. It was 6.7% at last count, which is, well, it's well above the Bank of Canada mandate of 2%. The
Mhm.
Bank of Canada has already said that it will tackle inflation forcefully as needed. And the latest inflation data is due out tomorrow, actually, the Canadian CPI. So that should provide some guidance on how the Bank of Canada plans to move on the 1st of June, which is its next policy meeting. A 50 basis point is largely expected. It's something Mr. Tiff Macklem, Bank of Canada governor, has already more or less confirmed. Supporting a lot of the economic indicators also support the case for aggressive rate hikes and show that the economy is robust and recovering well from COVID. So in February, I think GDP increased by 1.1%, and that beat economist estimates of the 0.8% increases. Um, Employment is near an all-time high. Unemployment is near a record low. Businesses are rebounding very quickly from Omicron restrictions. So the economy is strong. It can handle higher rates. But and of course, inflation is very high. Inflationary pressure is being felt everywhere, not just in the CPI, which we'll see how it plays out tomorrow, but also, in a variety of indexes: the industrial price index, the raw materials price index, and of course, Canadian housing. So the Bank of Canada will need to move aggressively. And that will mean, of course, a slowdown for the Canadian economy. But it's really a tight path. It's really a tightrope to walk, right? It's We need to control inflation, but without tanking the Canadian economy and the Canadian recovery. So we'll really have to see how it plays out. And tomorrow will give us a good indicator.
Well, can't wait for tomorrow. Well, thank you very much for your insight, Ketty. It was very interesting, as always.
Great. Thank you, Simon. I look forward to speaking soon.
Likewise. Bye.